Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin slash cryptocurrency update for Monday, February the 10th. So we just had our close about 30 minutes ago, so I'm going to dive into what I think is next for Bitcoin and also talk a little bit about the big picture stuff today as well. But before I do, please do me a huge favor. Hit the thumbs up button on this video. Don't forget to subscribe to the channel, and don't forget to click that bell icon for notifications when I release new updates. So the first thing I want to talk about is a daily chart of Bitcoin, and this is the chart here. And what I'm really watching is this rising wedge on the RSI. Now, I have been talking about this upward sloping trend line for a while, but what I was doing is I was pretty zoomed in, and it really looked like a ascending triangle, right? But then last night I had zoomed out and I was looking at this thing with a fresh pair of eyes, and I thought, holy cow, that's not an ascending triangle. It's a rising wedge, right? So what we have is a series of higher lows. We have a series of higher highs, right? And that is literally what a rising wedge is. That is a bearish pattern, but I'm only going to be really fixated on it if we break south of it, and especially if we have a daily close south of it. So, for example, when this thing dumped last night, a lot of people started to get a little bit paranoid, and there was a lot of "I told you so's" on Twitter. And not really a bull bear thing, but there was a lot of people saying, "I told you to take profits. I told you to take profits," right? And the thing is it just bounced right back up. It had dropped from, I don't know where it was, like 10,030 or something, right? It dropped down and then it just sprung right back up. We look at an hourly chart, you can see it opened right here and sprung right back to it. So had some warnings there to take profits. Of course, in yesterday's video, I talked about the fact that there's this bearish divergence on the hourly, and I said specifically, do I think 10K will hold? No, I don't think 10K will hold. I think it's played out. I think it's lost, its punch. And of course, it didn't hold, right? Once it got down to that level, it just collapsed. And we saw over on the CME chart, there was a $630 candle, a 5-minute candle. Bitcoin lost over $600 worth of value, right? And here on the, this is a Coinbase chart, the candle wasn't quite as large. It wasn't $600. I think it was around 300. Yeah, like $280, $290, somewhere in that ballpark. But right now, what I'm really watching is this daily chart, right? I'm watching to see if we get a close outside of this. Right now, there's going to be a lot of bears who are celebrating, and a lot of bulls who are worried. But I think both are premature, right? We could very easily just bounce right off the bottom of this wedge and keep going north. Now, to be very clear, I'm not longing it, right? I'm not saying that I'm long. That's definitely not the case. What I'm saying is I'm not ready to celebrate that, bears were correct, which of course is what everybody knows I'm rooting for, right? I'm rooting for a correction. So we'll see. Those are the lines that I'm going to, really keep an eye on. Another thing I wanted to quickly address today is, one thing you guys have to understand, I think most of you get this, but for those of you that don't, because every once in a while, somebody leaves just these comments that just makes my mind boggle, but you can be bearish on a macro level and still be bullish on a short-term picture, and you can be bullish on a macro level and still be bearish short-term. So, for example, in the last couple of videos, I said that I was, having a hard time being a bear and that I was leaning bullish. That doesn't mean that I'm long Bitcoin at these levels, okay? I've talked about this. I've been very transparent about it. I'm not sure where the confusion comes in at, but I'm long from 9,200. That's where I'm long from. I'm not adding to my position at 10 grand and 10,200. I'm not adding to my position at 9,800, right? When I say that I'm seeing bullishness, I'm talking about the general structure of the market. Like when you look at a weekly chart, we've got a higher close. That's bullish in nature. I still think that we need a correction, and more importantly, for those of you that skip around the videos and you're not catching this, I still think we have to see where that correction finds support at, okay? If we correct down to $8,000 and it does find support, I'm going to be convinced that the bottom is in, and I'm going to be convinced that we're going to make new highs. Maybe not new all-time highs, we'll have to wait and see on that, but new highs, right? That would be an uptrend. If you get a higher high on the weekly followed by a higher low on the weekly, right, you're in an uptrend, and makes sense to trade that as a bull versus a bear. On the flip side, if we do go back down to 7,800 or 8,000 and it collapses and price moves back down below these levels, then I'm going to be bearish, right? And I'm going to say, okay, well, this was a false rally, a fake rally. It seems like a lot of people are really confused about that. That's what trading is, waiting for more information. It's not about, okay, well, this happened, so I know this is going to happen. This was the first part of the puzzle. The first part of the puzzle was a higher high on the weekly. The second part of the puzzle will be a higher low, okay? Also, some people have asked me, James, that's, why are you calling that a higher high? It's not a higher high. We had a $10,500 price in October. I will just tell you guys that everybody has their own way of doing things. Everybody's got their own strategies, but every professional trader that I've ever learned from, that includes people that I've bought courses from, every one of the Wall Street guys I've bought courses from, every book I've read on trading, so on and so forth, they all trade closes, guys. So what that means is they are basing their highs and lows off the closing price. And if you're confused by that, the best thing you can do is change your chart into a line chart, and you'll be able to see this very, very easily. This was the high right here, okay? Now you have a higher high. It's pretty obvious, okay? Now, as far as wicks go, are wicks important? They are important. So like yesterday, somebody left a comment and they were a little bit confused about the fact that I said that, most professionals trade closes, but then in the same video, I said that these wicks were the reason I was bearish. Wicks still matter, just like tails matter. When you get a really long tail or you get a really long wick, you have to look at the psychology behind that price action. So the psychology here was bulls were euphoric and they were pushing this thing up crazy high. It went up like 20 or 30% in a single week, and then bears unloaded on them and shoved that price back down. And what that signaled was a shift in the market. It meant that the bears had taken control. They had taken back all of those gains. When you moved over a couple of weeks later, the same thing happened. Bulls tried again to push it up. They couldn't surpass this price level, and the bears absolutely dominated them, pushing it back down, not just to the open, but well below the open for a much lower close. So those wicks matter, okay? Just like over here, these tails mattered. Had these tails been a bit longer, it would have made me bullish in nature, and I probably would have looked for a bigger long position down here, but this was a fairly small tail, right? It didn't convince me that the bottom was in. It's also what you're looking for, like when you get a capitulation event, is a big long tail. I don't think we're going to have any on the, well, yeah, we'll find one. Look at this. Okay, so see this giant tail right here? Somebody could have longed the close of this candle, and even though it was a bear market back here, this is way back in December of 2017, right? Even though it closed so much lower, they could have still got a really nice 20% move because, basically the bears had run out of steam. Same thing over here. You have this huge tail, right, compared to this candle. And if somebody had longed the close there, they could have rode this up in a bear market. They could have still got a 45% move. So wicks and tails are important. And when I say trade closes, I'm not talking about ignore wicks and tails. I'm only talking about the bull and bear structure when we're talking about higher highs and lower highs and all that kind of stuff. Overall, there's a few trend lines that I'm paying attention to right now. On the weekly scale, this line matters to me. This is a line that did hold, right? And this is one reason that I had done a video and I talked about being bullish down around this level, or at least taking a long, and then I basically chickened out. There's really no other way to put it, right? The setup wasn't there, so it was a little bit riskier trade than what I would normally take, and so I used that as an excuse to take a smaller position and then also to sell early. But essentially, we did have this upward sloping trend line and this downward sloping trend line converging right around this area, right at $6,500 back here. And then when the low happened in December, it touched this trend line again and it shot off of it. So I'm going to watch this trend line and see what happens if price comes back down to it, right? It could be that this is the support. And if you look, depending on when it hits it, it's going to be a higher low for sure if it finds support. It's definitely going to be higher than back here, okay? So that could be the long-term trend line. Now, if that gives way, the next trend line that I would be interested in would be this trend line right here. And with this trend line here, again, it just depends on when it touches it, if it touches it. If it came down and hit it sometime in, say, May, right? Maybe post-halving dump type of thing. Might be down around $5,000 to $5,500, okay? The thing to keep in mind in all this big picture stuff is if for some reason price did move back down below these levels, you've got your 200-week moving average that's consistently curling up, and it's already up to $5,361. So it's going to continue moving up, right? At no point in Bitcoin's history has it closed below that and stayed below it, right? It's closed below it on a few occasions. I think there was 5 occasions that I counted where it's closed below it, like just barely below it, and then ended up moving right back above it a few weeks later. But it's never closed below it and then just kept moving down. Okay, so that's a really strong line in the sand, and as it moves up, it's hard to say, hey, we're going to go down to $2,000 or $1,000, right? When we got such a strong reaction here. Okay, but could we? Sure. Okay. So again, am I bearish or am I bullish? Right now, I'm cautiously bullish while expecting price to pull back. So, I guess some people would say that's bearish, but I'm not bearish in the sense that I'm still waiting for $4,000 Bitcoin, right? Like I've said in past videos, in order to get bearish on that level again, where I start looking macro bearish, we'd have to start putting in lower lows and lower highs on the daily chart and basically change trend direction, okay? Which is possible, okay? But there's no reason to really get super concerned about it until it actually starts to happen. So again, this is the rising wedge that I'll be watching. If it does break south of it and it closes south of it, I expect it will probably get a pretty big move to the south, okay? The other thing that I wanted to quickly mention today is, guys, don't forget about these gaps on the CME. I know that when I post about this stuff on social media, there's always these people that say that gaps don't matter and that you can't trade gaps and it's a coincidence and all that kind of stuff. Point blank, they're wrong, okay? And I'm not just saying they're wrong because I'm a guy that's been trading for 3 years and I think I know everything. I'm telling you they're wrong because professional traders trade gaps. And it's not just like, hey, I can Google this and find it on Investopedia. A perfect example of this is I was reading a book a few weeks ago called The Ultimate Day Trader. It's by a guy named Jacob Bernstein. He's got like 40 some odd years experience professionally trading. And guess what? There's an entire chapter dedicated to what? Oh, that's right, gaps. It's literally an entire section talking about trading the gap, okay? It's not a whole chapter, it's just a section. Why are professionals watching for gaps? Because gaps fill. That's just what they do. It's not 100% guaranteed. It's like today on Twitter, somebody said, oh, well, all those people that faded that $8,500 gap, they're still waiting or whatever, right? Well, if you went and faded the Tesla gap, you'd still be waiting too. Look at the wrong chart. Hang on, bear with me. This is Tesla, right? It started putting in gaps. Look at these huge gaps back here, down around $200. Okay. So a lot of people are assuming that oh look, gaps don't work because this one didn't fill. We don't know if that will ever fill. We don't know how low this is going to go. It might not, right? Not every gap fills. That is a reality. So nothing is 100% guaranteed. If it was, then nobody would ever trade. They would just wait for the gap and then trade the gap and do nothing else, and they would become trillionaires because they could develop a bot that ran on a simple algorithm that looked for gaps on every stock, and every time there's a gap, it would trade it, right? Nothing is 100% guaranteed. But the majority of the time, gaps do fill, and that's both in the stock market and it's in cryptocurrency. So right now, we do have some gaps that we need to be mindful of, right? These are daily gaps, okay? I'm going to focus on the daily, not the smaller time frame gaps. This one at the top is sitting around 11,795. This one was sitting between 10,030 and 10,200. And guess what? It, boom, got filled in. So we can mark that one off the list. So much for gaps not filling, right? Look at that. I mean, let's just be honest real quick. If somebody had shorted this, trying to fill this gap, they could have shorted this in the close of this candle at 10,240. And look at the money they could have made off of this thing. Right? Dropped 7% in the next 4-hour candle. Come on, guys. Of course gaps are worth looking at, okay? So we still have this gap down here between 85.40 and 85.75. We still have this gap down at 76.75 and 7,700. And see, people were saying, oh, well, what about that gap down at 3,500 that never filled? And my response to that is, what gap? What gap are you talking about? Those gaps are on the smaller time frames. The smaller the time frame, the less powerful the signal. And that goes for everything, right? A bearish divergence on a 5-minute chart or a 4-hour chart or a daily chart are all going to have very different significance. So what they're talking about is this gap way back here at this level here, okay? Down around 35.70. And there is a gap there for sure on a 4-hour chart. And it is possible that it does eventually get filled. But when you look at a daily chart, to the best of my knowledge, there has never been a gap on the daily CME that is not filled other than these gaps right through here, okay? And again, this gap filled itself already. So to the best of my knowledge, unless I'm just completely overlooking one, these are the only 3 gaps that have never been filled. Let's see. Those were filled. All those were filled. This one had the tail come down. This was the $8,500 gap that people said the same stupid stuff about when I was saying that gap would fill. Oh, it doesn't have to fill. It doesn't have to fill. You're stupid for trading that. Hey, guess what? Look, it filled, right? Because that's what gaps do. They fill. So again, 3 gaps. This one, and this one that all, are begging for some attention. So the next question becomes, well, wait a minute, there's one above us and there's 2 below us. Which one do I trade? Neither. We're so far away from both of them that I really don't care that much about any of them until we start getting closer to them, okay? And then I'll be looking for setups, either a long setup if we're up here or a short setup that would justify going short. But, I think that's one of the things that people make a mistake about is they're like, oh, well, if you shorted this, you would have got wrecked. No, you wouldn't have, right? You wouldn't have got wrecked because there was no setup back there to trade that, right? RSI, when this candle opened, which is where you would have been shorting it at, RSI was sitting at 64. It wasn't overbought. There was no bearish divergence. There was no key level of resistance that was standing in the way. This was opening at 7,700. It had just broke through resistance. On and on and on. There was no reason to go short there, okay? At least no reason that I could find. When you got up to this level, and this candle opened right here, same deal. Why would you be shorting this? Oh, because the gap? Well, that's not enough reason by itself. Look what happened. Price had just pulled back and retested a previous level of resistance that had flipped to support. Look at this. You're telling me again that you want to short support? No, you don't short support. That's ridiculous. And again, if you look at this candle right here, RSI was not overbought. There was no bearish divergence, on and on and on, right? There was no short setup. But when you start talking about this gap up here, right, RSI was overbought. Now, I don't know where RSI was actually at when this thing opened, but what I can say for sure is that we did have bearish divergence. Look at this. This candle made a higher high, whereas RSI right here made a lower high. So now you have a gap, and you have bearish divergence on the daily, and I would venture a guess if you looked at some of the smaller time frames, there were probably other signals that supported that short position. So that's what you're looking for. You're not just going to say, oh, there's a gap, I'm going to long it. Oh, there's a gap, I'm going to short it. You still have to find a proper reason to get into that trade, right? I mean, the thing is, guys, if you can say to yourself, this is a simple litmus test. If you find a quote-unquote strategy and you think, how hard would this be for somebody to make a robot, right, a bot, a program that would trade this with no human interaction? If the answer is any dummy could code this bot, your strategy sucks, right? Because if it was that simple, everybody would be doing that instead of doing everything else that they're doing, right? There are nuances to trading. There are setups to trading. There are, multiple factors that have to come together at once in order to make a setup, okay? And if you're not sure what a setup is, it's basically a set of rules that traders follow to enter and exit trade positions, okay? They're not, at least real traders, are not just guessing about, oh, I think the market's going to go up, or I think the market's going to go down, and then taking a long or short based on that. I thought the market was going to go up way back here in November. I did video after video saying that I thought it was going to pump up to $9,200, or that it could pump up to $9,200. I thought that because that was a 61.8 fib. But I didn't take a long based on that thought. There was no setup to take that long, right? When I finally got long, it was at 6,900, and then I closed it in the 7,200s because we were running into resistance, okay? Even though I thought it might still go up, I went ahead and took profits on that trade. Looking back in hindsight, I wish I hadn't have, but at the time, that's what the charts were telling me, was that the move was running out of steam, and then it busted through it. That happens sometimes. Okay. As far as altcoins goes, again, I'm not really trading alts right now. I said yesterday and the day before and the day before and the day before that, I didn't want to buy them because I felt like they were due for a pullback. Well, here's this pullback, right? It started. How low it goes, I don't know. But just as an example, if you FOMOed into Litecoin at the top, you're now down 6.8% in less than a week, right? Most of the alts are going to look like this. And the question becomes, well, how low are they going to go? Well, first off, it depends on how low Bitcoin goes, right? Because Bitcoin's going to drag everything down if it dumps. Whereas if it finds support and starts moving back up, I think the alts will move back up with it. But if this is indeed the top, what I'll do is I'll just go through all these alts that I'm interested in. I'll start drawing Fibonacci levels from the bottom to the top of this move, and then I'll start looking for retracements back down to the 61.8 fib, right? And I'll also watch for retracements back down to the 200 moving average. So if the alts, in some cases, the 200 moving average is going to be above that golden pocket. If it starts to find support on the 200, I might open some long positions, okay? If it falls through that, maybe not. But like if you look at EL's perfect example, this is what's called a tweezer top. You had stupid overbought RSI. This is daily RSI sitting at 80.5. This daily candle made a top of $5.04. This daily candle made a top of $5.05, right? Less than a penny apart. And, it looks like it's trying to reverse. This is a topping signal. Doesn't guarantee it goes down from there. You can see that it had the same type of signal back here, and it just kept going up, okay? But it is indeed a topping signal. So, again, I'm not ready to get long at these levels. I want to see that correction. I want to see that pullback, that, back down to that golden pocket. And that's going to be the case on every altcoin, right? For me, I want to make sure I'm getting my money in good. Here's a Ethereum chart, right? Draw it from bottom to the top there. The 200-day moving average is sitting around 174, which is actually around the 50 fib, or the 50 level. It's not really a fib. And then the golden pocket is down here around 160, right? So again, if it pulls back down to 160, yeah, I'd probably look at longing Ethereum if, the rest of the market still looked good and didn't look like it was, going to be continuing a downtrend. So I'm not going to go through all the alts because they're all going to be the same thing. They're all going to look like that, right? But when you're looking at an altcoin, look at Ethereum, 83.42 RSI. And I talked about this, I think it was yesterday, the day before, probably the day before, this yellow line, right? Even the all-time high for Ethereum, it got to that level and then it just, completely dumped. So that has been a historic line in the sand, if you will, for Ethereum. So, we'll see. We'll see what happens with all of it. This week it's kind of worn me out because with this big pump and this big move, it's been like, everybody's taking the opportunity who's disagreed with me in the past to come back and say, I told you so. And it's like, okay, right. I'm still not convinced, but, we'll see. Time will tell. We look at Bitcoin dominance. We can see that it's, clearly at some crazy low levels. Look at this. RSI sitting down there around 19, looks like 20.6 is where it's at now, but yesterday's low was 19.05. That's getting down into some crazy low levels. So I do expect that some of these alts are probably going to start losing some ground against Bitcoin. And it so happens that it's happening right around the bottom of that channel. If we measure this move, I remember when this move first happened, I said it looked almost like a flag pull. 486. If we measure it from, watch how this works, okay? So if we take this trend tool, we measure from here down to the low here in the first pullback, gave a target of 64.37. Where did it get to? Look at that. So to me, it looks like that move is played out. It looks like Bitcoin is probably going to gain some ground against alts, at least in the short term. So if you're looking for an alt season, it might be postponed. And again, this is sitting down around the bottom area of that triangle. So if it starts to move back up, right, that wouldn't be a great sign for alts. That's another reason that I don't want to start longing altcoins. And it's a reason that I took profits on a lot of my altcoins. Didn't sell all of them, just sold portions of them that I'll look to buy back cheaper. If they never go cheaper, cool. I'll put the money into Bitcoin or something else, right? If they do go cheaper, then I'll buy more of them back than what I sold. So that's kind of what I'm seeing, guys. It's just, business as usual. There's not really anything shocking going on. It's just a matter of waiting for a clear sign that, either the top is in, right, the local top, and then waiting for the correction and seeing how low it goes and where it finds support. Or it's a matter of, it's not done, and then it's going to bounce off this line and keep heading north and punish more bears, okay? Regardless of how high it goes, eventually it's going to retrace. That's a guarantee, right? That's about the only guarantee that you can make about markets, is they always retrace. What we don't know is how high it goes first and how much it will retrace. And those things could be anywhere from, it goes up another 200% and retraces 5% to, it goes up 5% and retraces 100%, right? We have no idea on that stuff. The only thing that we do know is eventually markets retrace. So with all that being said, I think I'm going to go ahead and wrap up there. I hope you guys enjoyed the video. Please remember, I am literally some guy sitting in a spare bedroom, so nothing in the video is financial advice, and you should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can join my trading course if you'd like to learn technical analysis and how to trade for yourself. This is James with Crypto Common Sense, reminding you to please trade safe.